Welcome, everybody. Hey, this is Peter. I have my co-host, Julia, with me. Hello, Julia.
Oh, hi, everybody.
All right. And today we're going to go over 2024, what to look forward to in terms of multifamily and commercial real estate. So, Julia, this is our annual prediction podcast, right? Where we get to
Yes.
share with our viewers how we think 2024 is going to go. I'm
Yep.
excited.
I'm excited too. This is a really exciting topic.
All
Thank you for
right.
having me, Peter.
You're welcome. You're welcome. And everyone, as you know, Julia is my right-hand person. She is the numbers and management extraordinaire. So listen to her. She's very smart. She knows the market inside and out. So Julia, let's get started.
Thanks, Peter. Awesome. Yeah, let's dive right into it. This is such an exciting topic. So let's go. What is your first 2024 prediction,
All
Peter?
right. And I think my first prediction, my first forecast is probably the most important. I'm going to have to say that interest rates are going to drop in 2024, right?
Yeah. Mm-hmm.
And I think it's not for the reasons that you think. Most people
Mm-hmm.
think, oh yeah, we have tamed inflation, and now the Fed's going to drop the interest rates, right? Well, inflation has went up a little this last month, but I don't. But my reason for the drop is not that. So I think it's
Right.
because next year is an election year, right?
Mm-hmm.
We're going to elect a president next year, and I think the if the current president wants to get reelected, he can make himself look really, really good by dropping the interest rates, right? He
Sure
can tell the
can.
public, hey, the economy is doing better. We're booming. In fact, I'm going to do you all a favor. I'm going to drop the interest rate so we can boost the economy. And so that's why I think
Mm.
2024, my first prediction is interest rates are going to come down, right?
Yeah.
I don't know how
Mm-hmm.
much, maybe a half point by the end of the year, but I think the interest rate rises, the spikes are going to end 2024. So I think they're
Right.
coming down.
Mm-hmm.
And from a real estate standpoint, I think what that's going to do is that's going to cause transactions to, the last couple of years, transaction volume has decreased, right? Because of the high
Right.
interest rates. I
Mm-hmm.
think I don't think we're going to have an increase. I think the level of downward trend is going to maybe be lessened, right?
Yeah.
And maybe stabilize a bit before it comes back up.
Mm-hmm.
Because now the more numbers on the deals will pencil out now because with the lower interest rates, you get more buyers in the market.
Right.
Okay, so
Yeah.
I think you'll see a few more transactions going on. I think you see a little more positivity in the market because interest rates are emotional, right? People see them coming
Mm-hmm.
down, they get excited. Okay, right? So there's that
Mm-hmm.
human element there. So I think that human element, and I think it being an election year, I think we can count on interest rates coming down a bit next year.
Right. And more investors in the market, it's going to stabilize values, maybe even increase them. Right.
Yep.
So
Yep.
it'd be interesting to see.
Yeah,
Yeah.
it is. It is. So we'll see. We'll see. All right.
All
So
right.
anyone out there that's watching, let me have your input on where you think interest rates are going to go. So go ahead and text me. Okay? Text me at 833-942-4516. Number will appear on the screen. Text me. So I would like to hear, right? And here's what I want to hear. Do you think interest rates are going to go up or down in 2024? So go ahead and text me that, or you can also put it in the comments. I'd like to hear from you.
Yeah. Yeah.
All
That'd be
right.
great.
Okay,
Awesome.
enough on that one, Julie. Let's get to the
Perfect.
next one.
All right. So what do you have for number two? What's your second prediction here?
Well, I think with number two, multifamily, which you and I own the most of, I think
Mm-hmm.
it's going to remain strong. And
I
in
think
terms
so.
of pricing, in terms of rents, I think it's going to remain strong.
Yeah. Absolutely. Absolutely.
So what I'm saying is, what I mean by strong is I think we should not look for multifamily prices to drop. Some people are waiting on the sidelines. Peter, I'm going to wait until it drops 30%, then I come in. That's not going to happen, right? And I think for anyone who has wanted to do multifamily, right, but will sit on the sidelines in 2024, waiting to see what happens is a mistake. I really do
Right. Right.
because I'm older, you're younger, but we're still long-term holders of multifamily, right? We think long-term.
Exactly.
That's where you're going to
Absolutely.
win. You need to get
Yeah.
in the game. Okay.
Uh-huh. Absolutely. Absolutely. Yeah. I mean, high home prices, they're going to keep people from buying a home. So that's going to cause that renter pool to continue to increase. Means that we're going to have an increase in long-term renters,
Yep.
right? So, what's more affordable? Is it more affordable to rent or to buy a house?
Well, you think about it, right? The average mortgage in this country is about $3,400 a month,
Right.
and the average rent is about $1,800 a month. So do the math, right?
There you
Right
go.
now, because of just what you said, it's more affordable to rent. So that's going to put downward pressure on the multifamily space and help sustain everything, prices and rents.
Right.
Hmm.
And, property taxes, insurance, utilities, those are all going to be going up
Have
in
yours gone up?
2024. Absolutely, they have.
Mine have
So,
too. And some
you
of our
know,
properties, our insurance has tripled.
yeah, it's going to
Hmm.
keep going up. Yeah.
Yeah. So for the viewer out there, they're wondering, well, property taxes go up, utilities go up, insurance goes up. How does that make multifamily better, right? What it does, it puts more pressure on the consumer to stay put as a long-term renter,
Exactly. Exactly.
right?
And to
Hmm.
that point, I mean, you have this pool of homeowners like you and I who have very low mortgage rates. So why would I trade in and go to an 8% interest rate, right?
Yeah,
So the
yeah,
overall answer to these questions is really that it's going to put demand on that multifamily and mobile home parks too. People are going to be moving to those kind of asset types because the housing prices are unaffordable.
yeah. And Julia, I would put on par in terms of positivity for 2024,
Yeah.
multifamily and mobile home parks. Right?
I
It's
agree.
it's it's housing. It's a lower level of housing, right? And let
Right.
me ask you this: in our country, is this country getting richer or poorer? This
Yeah,
country's getting poorer,
it
unfortunately,
is.
right?
It is.
And so the mobile home park investor or owner, they're looking good for years to come because of
Hmm.
what's going on in our country. So it's a
Yeah,
positive thing. So
right.
those of you out there wanting to know what's the best for next year, so Julie and I think it's multifamily and mobile home parks, right? Long
Oh,
term, you're going to
absolutely.
win.
Absolutely.
Hmm. Hmm.
Absolutely. Yeah. I got another question for you.
Yeah.
So, how much of an impact will maturing multifamily loans have on the 2024 market, in your
Okay.
opinion?
Okay, well, that's a hot topic right now, and it has been since the middle of this year, 2023, right?
Right.
Because if you look at the stats, there was about 49 billion, okay, $1 billion in loans maturing in 2024.
It's a big
In
number.
the next 12 months, $49 billion worth of loans needs to be refinanced or paid off,
Right.
right? And when you think about it, the person who bought their property a few years ago, now their loan is coming due. What happened? What's going to happen when their interest rates that they were able to get 3%, 4%, and next year they're paying 6 or 7%? Can they
Hmm.
afford to do that? Can they afford a double mortgage payment?
Hmm.
A lot of
Yeah.
them can't. So we are going to see distress in the multifamily market because of that. You're
Uh-huh.
going to see it. So people are either going to have to sell sometimes at a good price, um, or I don't see a lot of multifamily loans going back to the bank. I don't see that because the equity is there, right?
Right.
So don't
Right.
expect this to crash the market. It's not going to crash the market, but you will see distress, right? I've
Right.
already I've already seen it locally here where I am. I've seen it,
Right.
right? But it's not widespread.
No.
But
Yeah.
it's but it's going to happen.
Right. Some of those deals are going to be really, really good deals.
I think so. I
Value
think so.
add. Yeah.
Value add, there you go. Value add is going to make it a
Yeah.
comeback. I believe the later part of
Absolutely.
2024, value add is going to be there.
I
Mhm.
think so. Got to be
Yeah,
prepared for that.
yeah, yeah. And when you say prepared, when someone says be prepared, what I think is you should be prepared financially, right? Number
Exactly.
one, right? We call this having dry powder. I mean, having your money on the side waiting to go into this market, or have your investor money waiting to pounce on opportunities. right? Because
Exactly.
they're going to be there in 2024
They
with
sure are.
$49 billion maturing in 2024. I've also read that from 2024 to 2027, several trillion dollars is going to mature in multifamily loans.
Wow.
That's a lot.
7 trillion.
That's a
Think
lot.
of that
Yeah.
number. It's
Mm-hmm,
almost
mm-hmm.
like an unfathomable number.
It is. It is. And
Wow.
so everyone out there, think long-term multifamily.
Yeah.
Think
Yep.
long term. You are going to win. Okay. And 2024 is when you should get started if you haven't already.
I agree.
Yeah.
Couldn't agree more.
I'm looking for opportunities.
I
Right
sure am
now.
too.
Yeah. And believe it or not, I think I told you this yesterday. I was outbidded recently.
Yes.
So people are
Tell me
still
this.
bidding.
Oh, yeah.
Yeah.
Oh, yeah.
I was outbid by quite a bit. Yeah.
I recall you
Incredible.
telling me this.
Yeah.
Yes.
Yeah. So multifamily is still good. And that company, again, you're thinking long term. Okay.
Exactly.
Just like we should.
Exactly.
Okay.
Exactly. Well, let's switch gears then. Let's start talking about some other asset types because we did cover a lot of multifamily. That's
Mhm.
going to be a really good investment. But what about the other asset types? So, first question for you, self-storage. I always wonder, isn't it considered a luxury in some markets? And when I say luxury, I mean, is it going to be the first to be cut in a recession?
Okay, great question, right? And so during a recession, people will cut back, right?
Right.
They will cut back. I get that question asked a lot, right?
Mm-hmm.
What I like about self-storage, and this is already proven with our current students that you help manage, right, with their
Mm-hmm.
properties, is they're doing well and they have done well even during the pandemic, right?
Yes. Mm-hmm.
Because when people cut back, they will downsize and put their stuff into storage.
Exactly.
That's what's happening.
That's what
And
we've
the
seen.
other thing we talked about this, right? I have friends that have things in storage, right?
Mm-hmm.
And they also cut back. Well, they didn't cut back on storage because it was only like $90 a month to have this put in storage,
Right.
right? So it
Right.
doesn't cost a lot to use storage.
Right.
Yeah. So that's
Yeah.
why I think in 2024, even if we go into recession, storage is going to be strong, still
Good.
strong. hmm
Yeah. That's what I agree.
And I think
So,
the same thing with I'm really bullish on industrial and warehouse. Yeah,
yes.
some areas in the country is overbuilt, but for the most part, it's still strong. With
Mm-hmm.
years ago, e-commerce caused industrial and warehouse stores to kind of go up, and it's going to continue. E-commerce is still leading the way.
Right. All our students that have warehouses, they're doing really well too. So I
They
don't
are.
foresee that being an issue whatsoever.
They are.
That'll still
And
be good.
our latest closing, if you recall, right? The feasibility study said that he should build flex space.
Yes.
Right? There's a shortage of flex space in
Mm-hmm.
that city. So there's
Yeah.
always opportunity, right?
Mm-hmm.
If you have the space and you have self-storage, why not put maybe an RV space there, flex
Exactly.
space, industrial condos. There's always opportunity to do that. You just have to know what
Absolutely.
to put there. And that's what we
Right.
specialize in, helping our students figure out, right?
Exactly.
Yeah,
Exactly.
yeah.
And that brings us to the mobile home parks and RV parks, like you just mentioned, RV parks. I think those are going to kind of fit together with the multifamily. I think it's going to be lumped into the multifamily predictions that we have in terms of just being positive in
hmm
2024. It's still the idea that it's a roof over your head. So I think that's still going to stay strong.
Yeah.
What's your opinion though on office?
Yeah, well, let me ask you this question
Sure.
on mobile home parks, right? So
Sure.
our current students that own mobile home parks, how are they doing? Are they raising their rents? Are they stable? Do they have a lot of vacancies?
They are. They're doing very well. They're actually, the vacant units are being re-rented very quickly and they are raising rents. They're doing very, very well with mobile home parks. Again, it's the whole concept of trying to find something that is affordable in this economy, right?
hmm
And a lot of people, that's what they want to do. It's a very good time to be an owner of these asset types.
Yeah, where people need a place to live.
Absolutely.
Yeah, and the places where you help our students on, we're talking the entire United States, right? For mobile home
Oh,
parks.
yes.
Yeah,
We're all
and
over.
RV parks. Yeah. hmm
Yep.
Yeah,
Yep.
that's great.
But yeah, so I was saying office. That's another big one that I think a lot of people have a question on. office, historically had a decline because of, COVID and everything. So what do you think we're going to see in 2024?
Well, I'll tell you what I'm currently seeing right now, and then we'll go into what I think is going to happen.
Okay.
So currently, I'm still at a vacancy, right? I'm in a big city here in California, and I
Yeah.
would say we probably have over 30% vacancy, maybe even more for
Wow.
this, right? And you can go downtown, and it's just like no one down there. And
Right.
you can drive around during lunchtime, and there's no one there, and it's kind of scary, right?
Yeah.
And so that's the fact of the matter today, right? And
Right.
I've seen this year, I've seen properties that were valued at $200 million, valued in 2021, sell this year for
Wow.
70 million.
Wow.
I've seen that. I've seen that transaction,
Wow.
several of them. I see, and I'm talking only California office market from on the western side of the United States. From Northern California, Southern California, I'm seeing a lot of loan defaults.
Right.
These big REITs worth hundreds of millions of dollars is
Hmm.
handing over the keys to the bank, saying, I'm walking away from this loan for an office building, right? I'm seeing that, right?
Wow.
And it's because COVID and everyone's working from home, things like that. So I'm seeing that this year. So a lot of volatility there. So,
Hmm.
however, right, there is always kind of a diamond in the rough, right, where there's opportunity, and where
Hmm.
I'm seeing opportunity is the guys that are suffering are the C-class office buildings, right, with
Right.
the older, not looking as nice, but the A class, right, where I have my office, they're booming,
Right.
right? They're booming. My landlord, my office building is 90% occupied. It's a
Wow.
beautiful, beautiful building. He's 90%, right?
Wow.
Hardly anything available. So and it's right in the middle of San Francisco. So the nice office buildings are going to do well, right?
Okay.
And the companies that I've seen buy the ones that kind of went belly up, they are dumping hundreds of millions of dollars into those new buildings to make them nice like ours.
Wow.
That's what
Yeah.
they're doing. That's where the opportunity is. So
Yeah.
this is for the big player, right? Not for our average student. This is for the big player, right?
That's what I
So
was
for
going to
our
say.
average beginning commercial estate investor, I would say don't play in that field because
No.
you don't have to. We have other opportunities for you.
Right. That requires a
Mhm,
lot of capital. The repositioning
mhm,
of an older office to get to that A-class quality,
mhm.
just not for a beginner. It's going to
Yeah,
require a lot of funding.
yeah,
So,
yeah. Are you seeing now people come out to the office?
yes, yeah. And the big cities near me, they are starting to bring people back to the office. But I think what we're going to see long term, same idea. I think the office is going to level out.
Hmm.
If there is going to be an increase in office, it's going to be, like you said, a flex space type use. They're going to do additions to those buildings to make it A-class, add the amenities, add all of these beautiful things to it. But again, requires a lot of capital to do that. It requires a certain company to come in and do that. So
Yeah.
yeah, that's what we're going to be seeing.
I see that here too, right? So I'm not too far from Silicon Valley. And yes,
Mhm.
you do see the news of the layoffs and things like that. But for the most part, they're coming back into the office. And
Yep.
how do I know that? Is when you look at the freeways, right? So the
Hmm.
freeways heading down towards Silicon Valley, those are getting more plentiful of cars. So that's how I
Yes.
can tell, right?
Right.
During the
Right.
peak of the tech, you couldn't go anywhere because all the cars were there. And then pandemic happened, the streets are blank, and now slowly it's starting to come back. So office is not going to go away. It will make a rebound. It's going to just be a little bit reinvented, but it's not going
Right.
away.
Yeah. No, I agree. I agree.
Mhm. Yeah, but just be
Awesome.
careful with office.
Yes, I
Mhm.
couldn't agree more. What do you have for your third prediction, Peter?
Well, third prediction, uh, I wanted to talk about consumer sentiment, right?
Okay.
How does the average consumer feel about the economic direction of our country?
Right.
Because when you think about it, if the sentiment is high, they're spending money,
Right.
right? Boosting up our economy, right?
Hmm.
If they are fearful or cautious or guarded, or they do not have a good feeling about our country, they pull back their spending, and that hurts our economy.
Right.
Right?
Couldn't agree
So
more.
consumer sentiment is really, really important, right?
Mhm.
It's not talked about enough, but it's really important. And I think the average consumer is a bit hesitant or fearful in our economy.
I agree. I
Yeah.
think there's the average American, I think they think in this time, they think negative, they think fearful, they're
Mhm.
thinking recession,
Yeah.
right? But as an investor, this is really exciting. I see this as an exciting time. This
Yeah.
is opportunity. That's the big word that comes to mind for 2024 is opportunity for
Yeah.
me,
Yeah.
right?
Yeah. Okay, everyone out there, Juliet has made her prediction. 2024 is the year of opportunity. All right. So everyone in the comments, right? I want you to put in comments right now or send us a text 833-942-4516. How do you feel about the economy and its direction? Okay. Julia says opportunity, right? What do you say? So opportunity or tell us. We'd like to hear. We'd like to hear. What do you think? Right? Okay.
Exactly. Do you agree with me or disagree?
I
I
agree.
want to hear.
I agree because I'm all, I tell my wife always, right, when we're driving around, right, and I'll see a building, right, and I can tell her that landlord's distressed right now. She goes, how do you know? I can tell, right,
Right.
by the outside or who's there or what's not happening. And she
Mhm.
goes, well, what if we go in a recession? I go, that's even better, right? And I'll
Right.
tell her all about the strategies that we can do to buy such a building and make it better and make a bunch of money.
Exactly.
So that's the mentality you need to have. So
Mhm.
these crises that we see are ways of or opportunities, basically. Mhm.
Exactly.
Yeah,
Exactly.
and this is exactly what we do for our students, right? How many times have a student, Julia, have brought a deal to you and said it was a dog of a deal, and then you go, wait, did you look at this? Now all of a
Exactly.
sudden their eyes are open. All of a sudden we close on a deal to make a bunch of money. How many times has that happened?
I couldn't even count, Peter, if I
Yeah.
tried.
Hmm. Yeah.
Things
So
always
it's
get missed.
yeah.
So,
So it's the type of eyes you need to have opened and focused on. All right. It's the perspective. So is your perspective fear, shrinkage? Robert Kiyosaki used to do this loser. I won't use that. That's kind of a harsh word, but for me, it was harsh at the time because back then, 25 years ago, that's how I looked at risk was like that, right?
right.
I didn't realize that you can manage risk with your experience and wisdom and having a good team and knowing your numbers and make a
Hmm.
lot. That's what we've done. And that's what we do. And that's what you do for our students.
Exactly.
Mm-hmm.
Exactly.
Yeah.
And that brings us to the point of, opportunity. And everybody asks, should we invest today with everything going on or should we wait? And our answer to that would be waiting is not recommended, right? And what the smartest investors do in this uncertain market, they do three different things. First, they're going to look for the opportunity.
Yep.
There's always going to be a good deal out there.
Yep.
Second, they're going to become a non.
So on number
Yeah.
one, Julia, so there's always a good deal out there. Some people are going to say, oh, no. And if I look online, nothing cash flows, right?
Can't look online.
That's right. That's the problem, right? Looking online, right?
Nope.
What's the solution? Go off market,
Off market.
off market. All the deals that we have were interviews of our students, the great deals that we show on YouTube. Um, I would say 90% are off market, right?
That's what I was going to say, about 90%, I would say. Yeah.
That should tell you something.
Oh, yes.
Yep.
Oh, yes.
Okay. What's
Yep.
what's next after that?
Second, I would say would become a nonstop learner of real estate investing. It's a really good time to do that.
Hmm.
And
So
lastly,
so what
oh, go ahead.
what are some? Let's talk about that for a second. So become a nonstop learner, right? And I could answer that because that's who I am. That's what you are. You're always asking, what am I reading? What am I watching? Send me the video,
Yes.
right? So so if we tell our average student to be a nonstop learner, what are some things they should do?
They're going to be learning everything that they can about the market around them, about the market in our entire country, nationwide. It's so important to know what's happening nationwide and specifically in your market, learning the deals, learning, basically taking in everything that we train them on. absorbing everything that we're teaching them as far as how to market, how to find good deals, how to analyze those deals, how to bring them to closing, how to structure those deals.
Yep.
Most importantly, especially in this environment with high interest rates, how to structure the deals, because the higher interest rates a lot of time will kill the deal.
Yeah.
But we have ways to get around that. We have ways to restructure deals and to make them make sense for both parties. That's really the ultimate goal. So that's what I would say.
Yeah, spot on. Spot on.
And I think the most important thing here of what to do in an uncertain market is to make sure you get help, right? So get a mentor, especially a mentor that's been through this 3 cycles and survived them all.
That's me.
Peter Harris.
See the scars?
I
survived it. I survived it all.
You're here to tell the tale. That's most important.
That is so true. And so you can tell, you and I have a passion for teaching people and helping them, do what we've already done. And that's what life is about. So you're spot on, get help, right? And if you want to build like a commercial real estate portfolio the right way, in a smart way, right, where you could leave a legacy for your family or retire from your job, you need help, like from us, from Commercial Property Advisors, right? We have other coaches with decades and decades of experience in owning thousands of apartment units in commercial space around the country, right? And that's what they need, right? We can smell a good deal and a bad deal 1,000 miles away, right?
Absolutely.
So yeah, and Julia, our average student, right? Our average student who closes on a deal, that deal was their largest financial transaction in their life, right? In their life, right? And you need help to do that. So if you can take that chance, right, get help, right?
Absolutely.
And if you have money and you want to invest and you don't want to get help, then don't invest. Just hold on to the money, because we don't want you to lose it on something else. Just hold on to it.
Right.
Yeah.
That makes a good point too. I have another question for you that brings up, with the capital that people have, you always see commercials now about investing in silver and gold.
Yeah.
What are your thoughts on that strategy?
Well, that's certainly a strategy, right? It's a way to diversify, right? But anything that you put any money into, don't you really want to understand how it works? Right? Even though gold is pretty stable and silver, these metals, there's a strategy of buying it, like buying real estate, right? So what are you going to do? Are you going to study gold? Or are you going to study real estate? Pick one.
Right.
But I can tell you, nothing beats what we do, right? So we buy commercial real estate, right? Apartments, stores, mobile home parks, all that. And we get income, right? We get appreciation that sometimes we can force, and we get depreciation. We get the massive tax benefits. So income, appreciation, depreciation. Can metals, gold and silver, do that for you?
I don't think so.
No, it can't. It can't, right?
Nope.
So if there's something out there like that, please let me know. I would like to know, right? I would like to know.
I would too.
Yeah, I don't see
but I don't think so.
That can do it like commercial real estate.
No,
I don't think so.
Nothing.
All right. Okay. All right. So if we leave you, audience, with anything, 2024, we want you to focus on those 3 things, right? Investing in something that provides income. Number 2, investing in something that provides appreciation. Okay. And then investing in something where you can get depreciation. Those 3 things are key to wealth building, long lasting generational wealth building financially for yourselves, right? All right. Okay. All right. Did we exhaust all of our predictions and forecasts, Julia?
I think that's all of them. I think so.
Okay. All right. Well, everyone, so there you have it. So thank you for joining us today. 2024 is going to be an incredible year. Julia just called it. She said it's the year of opportunity. And I agree 100%. 100%. All right. Julia, thank you for hanging out with me this afternoon, and so much appreciated. And do you have any last words for our audience?
I think that's it. Take on those opportunities.
There we go. All right, everyone. We'll see you on the next video.